What you have here is the makings of another blow off top, because you're going to have lots of companies all over the world engaging in this strategy, taking out debt, buying Bitcoin. You're going to see a typical correction of 10 or 15% become a 30, 40, 50% correction because of the unwinding of all these corporate treasury companies. Could be the story of the next pullback. And Saylor himself has said Bitcoin will go from 220 or 250 back to 180. Like, he's already anticipating this. And, then the cycle will begin again. And then we have a big drawdown.
This latest market update dives into fresh insights from Max Keiser, who just shared bold new thoughts on Bitcoin and MicroStrategy. Keiser warns that the market may be approaching a dramatic turning point, possibly even a blow-off top. He also cautions that many corporate treasuries could mishandle their Bitcoin strategies, setting the stage for the next major crash. But at the same time, he explains how investors can prepare before that moment arrives. Right now, Bitcoin is showing a slight pullback after recent highs, signaling a bit of cooling in the market. Meanwhile, MicroStrategy, the largest corporate holder of Bitcoin, is under pressure as its stock has dropped to its lowest point in 4 months. The decline followed a new company policy allowing it to issue and sell additional shares, even while the price is down. For some, this move looks risky, potentially diluting shareholder value, but others see it as a smart way for MicroStrategy to raise cash and possibly accumulate even more Bitcoin at strategic moments. The result? Mixed reactions among investors debating whether this strengthens or weakens MicroStrategy's long-term position. Now let's break it all down and hear directly what Max Keiser has to say.
Like, everything we've been saying for 15 years has been true and accurate, and the need for it has been legitimate, and the fragility of the existing system is now evident, and it's breaking apart. And now the need for Bitcoin has never been greater, and so we're entering into another chapter, which is going to see, I think, some pretty significant changes. But we'll be here, reporting on it. 2.2 million is in play. It's easy to see where this is going, and so it doesn't seem like a stretch. The total addressable market is 400 trillion. That total addressable, all the fiat money world is literally a Ponzi scheme, and you can't taper a Ponzi scheme, and it's starting to unwind. Now there's I believe, an effort that they believe in Washington and elsewhere, they're going to keep this Ponzi scheme going. I think we're at the end game. I think they're at the end game for both the central bank model and the nation state model, and Bitcoin will emerge as the global reserve standard. And so that means, and everything goes to zero against Bitcoin. So, I think Michael Saylor has a $13 million per Bitcoin prediction out there. And I can see how you can get there, because you're talking about squeezing 400 trillion into 21 million units of Bitcoin, right? The price discovery tells you where the price is going, and they can't make any more of it. It's not hard to come up with these numbers, and we've been right. I mean, the only really important price prediction I ever made was in 2011 at the first Bitcoin conference in Prague, when Bitcoin was a few dollars. And I said in my speech to the conference that if this works as an asset class and captures 1% or more percent of global Forex, then this is a $100,000 per coin asset. It was really also really seeing the potential of Bitcoin at that time as an asset class and being competitive in the global asset world, where I know as a stockbroker, you have a fiduciary responsibility to at least consider these assets. And if so, if it pops up on your Bloomberg machine, it's going to gain traction, and the market's huge, and the price is going to go up. Well, the primary use case of Bitcoin is separating money from state. So when corporations are buying Bitcoin and you're buying shares in those corporations, you're reuniting money and state. So it's going backwards from the primary mission. On the corporate treasury front, you've got a lot of companies with a lot of cash who are buying a lot of Bitcoin. The thing about Michael Saylor is that back in 2020, he had $500 million on the balance sheet, and he could have done what every single CEO in America has been doing for 20 or 30 years, and that is to buy back his own stock. That would boost earnings per share, which would make his stock options go higher, and he could make a lot of money that way. But he took the very bold step of trying something no one had tried before and done before. He put that $500 million into Bitcoin, and he set in motion something that has profoundly changed corporate finance. So what you have here is the makings of another blow off top. because you're going to have lots of companies all over the world engaging in this strategy, taking out debt, buying Bitcoin. You're going to see a typical correction of 10 or 15% become a 30, 40, 50% correction because of the unwinding of all these corporate treasury companies. Could be the story of the next pullback. And Saylor himself has said Bitcoin will go from 220 or 250 back to 180. Like, he's already anticipating this. And, then the cycle will begin again. This idea that we will no longer, or we've broke free of the 4-year cycle, right? We've said that at the top of every 4-year cycle, that we've broke free from the 4-year cycle. And then we have a big drawdown. And people, it's like, oh, why didn't I realize that nothing changes and everything is always the history rhymes over and over and over again. As a Bitcoiner, I like to see the demand for Bitcoin.
There's plenty of research on Bitcoin and holding your own Bitcoin. And that's, at the end of the day, the most important thing for you to go down that rabbit hole rather than worry about which company is going to crash first.
Yeah, you've removed one of the charming aspects of Bitcoin is you don't have to follow the companies and all the risks that come with owning stock in a company, the management risk, the regulatory risk, the market risk itself, and the competitive risk. These are risks that these companies deal with every day. Sure. And so on a risk-adjusted basis, just owning Bitcoin, you don't have any of that risk. And you've got still a CAGR rate of, I think it's still like 50% or something very, very high, which is beating every money manager in history. It beats Warren Buffett by like 2 or 3x. What more could you possibly want?
In conclusion, today's market action makes one thing clear. Bitcoin and MicroStrategy are still tightly intertwined. Bitcoin's small dip is just another reminder of the natural swings in the crypto space, while MicroStrategy's new share policy has sparked heated debate. Is it a bold, forward-looking strategy or a risky gamble? Whatever side you're on, one fact is undeniable. MicroStrategy has tied its future directly to Bitcoin's performance, and that means investors everywhere are watching closely to see how both stories unfold in the weeks ahead. For now, Bitcoin remains resilient, and MicroStrategy, controversial as ever, stays firmly at the center of the crypto conversation. If you found this analysis valuable, don't forget to like this video, subscribe to the channel, and share your thoughts in the comments below. We want to hear your take. Is MicroStrategy playing it smart or taking on too much risk?